Welcome to Pathfinders trainings and one more live trading session. I'm Yogeshwar Vashishtha and let's analyze the market further. Today, the finance minister is likely to announce a fiscal package, and on that hope, the market has rallied up. I Yesterday was a big crash into the market, and I booked a loss yesterday after 15 days of continuous profits. I booked a loss yesterday of 12,000 rupees in stocks and of 5,500 rupees in FNO. And I was carrying, this is a 15 days of profits I've been running continuously on my 10 lakh rupees of capital in my online trading room. But yesterday, I booked a loss of 17,000 rupees despite all the risk management methods. There will come a day when you will not be able to handle it and you have to book a loss. Not only that, I was carrying a loss of 24,000 rupees from yesterday, but today, using the advanced options methods and options strategies, I could recover all of that. And so far, I have booked a profit of 49,617 rupees here. And I'm also running some stocks and booked a 992 rupees in Axis Bank and SBI. And I'm short on HDFC Bank, and Reliance. In live trading, you always have to keep in mind, especially when you are doing intraday and swing trading, is that you can go completely wrong and you have to protect yourself either by using stop losses or by using options or by using multiple strategies that are available. Let's analyze the market, guys. And you see here, the market is just not going up. And with the curfew in the whole country, coronavirus cases increasing all over the world, there is a panic. This is just a temporary recovery that has happened, and the market might resume its levels back again where it's going. Let's look at the various levels of the market. In my previous video, also, I was talking about that in a panic situation like this, a 50% retracement is a common phenomena, and we see it has already broken the 38% retracement level and moving towards the 50%, which is 7273 in 2008 crash. Let's see how much did the market, go in 2008 crash. What was the So in 2008, if I draw, this were the levels in 2007 when the market was rallying, a bull run that we had, like we had in 2019. And then once the crash started, it retraced back almost till the golden Fibonacci level of 61%. And since the situation has not yet improved, it is just a temporary the spike that is happening. So we should keep that level in mind. Factories all over the world are closed. All over the world, the factories are closed. Production is not happening. People are sitting at home. Economic activity is hampered. And this coronavirus not only has health implication, it also has money implications because finances would become severely constrained, and it will be very difficult for the recovery to happen, and very likely we will go into a recession for 1 to 2 years. A classical example is the recession that happened from 1920 to 1930. We had a similar pandemic in 1918 to 20, in which a few crore people died. That's what I was reading on the internet. And after that, it took a long time for the whole world economy to recover. So that is something that you have to keep in mind. The Market is about 311 point plus today. These are the levels. If you're looking at the bank nifty, this is bank nifty here, and bank nifty is behaving similarly. Look at the bank nifty, it is behaving similarly, and this one is actually weaker than the index, the nifty, because it has already broken the 50% retracement level, and it is going towards the golden Fibonacci level. This would be a very crucial level for bank nifty, for the bank stocks, 14,450 level, because if it goes down, there is a big bottom on the downside. So you take care of that. All the blue chips, all the top 10 companies are all battered. So they're just going down, down, and down. Reliance, SBI, ITC, mark levels for all of them. And we see that for the moment, so they are just moving down, down, and down here. L&T has very deep correction. And if you look at the VIX, the volatility index is touching 80, which is unheard of. It has never happened before. The highest that was there previously was a value of about 64 in the year 2008. And this time, the volatility has gone up like anything. And this is a very worrying sign. So stay safe. It's also a great time to start building the portfolio. If you want to build a portfolio scientifically, I'll strongly advise that you learn it properly, because at this time, the junk stocks will never go up again. In 2008, there were so many stocks that went down 80, 90%, but they never went up like Arcom and Suzlon. So take care. These are great opportunities, but also a very risky market. So work with proper, precautions. Use stop losses. Use methods, and learn technical analysis, fundamental analysis, and the way you trade and invest. Don't invest emotionally. Just because the market is down doesn't mean you will buy just anything. What if it goes down further? So take care. And this is how the market is going. The finance minister is announcing a package, and we see this is how the market is going at this moment here. If we look at the money control, one thing you have to note is that the major sellers have been FIIs. In February 2020, they sold for 12,684 crores, but in March so far, they've already sold for 54,232 crores. So we are in a market which for the moment is in a sell mode. Retracement on the upsides become good opportunities to short the market. Make sure if you have a big portfolio, it is hedged properly, and don't buy stocks until unless you have done proper fundamental analysis on that and know what are the technical levels for those stocks. Thank you very much for listening to analysis, and see you again in one more analysis. Thank you very much.